G'day folks, it's Jim here. It is Friday the 22nd of March. Well, the US dollar has regained much of its lost ground following the FOMC outcome of the previous session, and stocks are also up by 1 to 1.5% as jitters over the Fed's warning of an economic slowdown were cushioned by some upbeat US data today. Both the jobless claims and the Philadelphia Fed manufacturing data beat expectations, and that helped the dollar out. But it also received plenty of help from sterling, which fell sharply as the chance of a no-deal Brexit seems to increase, while in the EU, German 10-year Bund yields collapsed and did the euro no good whatsoever. Today being Friday, there's not an awful lot of data out, although we do have the flash PMIs, but all the things being equal, I think we're probably in for a fairly range-bound session, unless the PMIs do spring a surprise. But before we're going to have a look at the charts and see what they've got to say. Okay, we'll start off with the daily dollar index. Now we've come down here to test this 200-day moving average, which held this trend line off the February 2018 lows, and we've bounced back up to the 100-day moving average, which currently provides the resistance. So we're stuck between these two. And it could well be that we end the week somewhere in the middle. But the dailies do still point lower, so I wouldn't be getting too carried away either way. They may be a little bit heavy, but if we go and have a look at the 4-hour chart. So here we are with the 4-hour chart, and the indicators for the time being do point slightly higher. If we can get above this 96.5, 96.65 level, then we might see a bit of an acceleration to the top side. At the moment, I'm not sure we're going to do that, and as I say, I think we're probably in for a fairly choppy session. We'll go and have a look at the euro. Okay, here we are with the euro. Now, we had the spike higher after the FOMC, since when it's basically given up all that ground. It's recovered up off its lows down here. It's a 113.40 or so. But the 4-hour indicators are still pointing lower, so I think selling rallies on the day is possibly the way to go. At 114, but equally if we saw it down at 113, I think I'd probably be looking to buy with a 30-point stop loss on either side. The dailies are pretty neutral, and we're currently back at the 100-day moving average, or a 55-day moving average as well, and it wouldn't surprise me to see us end the week at around about current levels. Elsewhere, sterling had a tough session, but it has recovered above 131, and the hourlies look mildly positive, but the 4-hourlies and the daily charts both look heavy. So another test eventually of this 200-day moving average down here at 130 would not surprise, and below 130, 129 sort of 15 is the 100-day. But if we do get a no-deal Brexit, and that's getting more convoluted by the minute. Nobody seems to know what's going on in the UK, but if we do end up heading towards a no-deal Brexit, which the end date is currently due on the 29th of March, so it remains to be seen what the outcome is there, but if that happens, then sterling's going to head far lower, and that'll take the euro with it to a certain extent as euro sterling heads higher though. On the day, the Aussie is back down. It's been down to 70.90. It's back at above 71 at the moment. The hourlies are fairly neutral, and the 4-hourlies are also pretty neutral. They are pointing a little bit lower, but I think if we saw it below 70, well, there would be support at 70.80. I think you buy it there on the day. Probably sell it at 71.40, again with a 30-point stop. Elsewhere, the other thing I'm looking at today is the S&P. That's made another high, another 5-month high, but we are running into resistance at these previous lows around this level. But we're sitting up here against that at the moment. As I said before, there is some bearish divergence here, so I'd be a little bit careful on the top side. But for the time being, the shorter term indicators, 4-hourlies and the 1-hourlies, they are pointing a little bit higher. I think it is going to be kind of choppy, but I do kind of like the S&P a little bit higher. But having said that, I would have a pretty tight stop if we were to see a break of this support level at these highs here. There's further support down here, but that's below 2800, or right around 2800. That's some way off at the moment, so I'd probably be looking to buy it at the moment at sort of 28 40.50, and have a stop loss here at 28.20, but then possibly look to buy again down here at 28 with a tight stop again below that. The other thing, oil is not doing a huge amount. It's sitting around this sort of $60 level. I still kind of like it high, but it may be running out of steam, so keep stops. I would keep stops really just under 59 now. This level here, this neckline is coming slowly higher, so put stops just underneath there. But I'm looking still for a run towards this 61 3/4 level. Now the only other thing I'm really quite interested in at the moment is silver seems to be in the process of building possibly a head and shoulders top. Now if that's the case, neckline's down here at sort of 1490. Now equidistant from there, if we were to break that, it will bring us back down to around these lows, so it's worth watching. Not really a trade for today, but I do like to sell rallies, probably around 1575, 1580 if we see it up there, but with a stop loss just above 16. So that's about it for the day, for the week. Have a very good one, and we'll talk to you on Monday.